I just finished a call with one of my clients, and she is a traveling nurse, and she's like, Brittany, the one thing I love about traveling is that I get to explore the world, but as a 1099 and the variable income, it is hard for me to create a budget. So today in this video, I am going to give you some of the tips and all of the good stuff that you need in order to create a budget on a variable income. Stay tuned. Hello and welcome back to my channel. I am Dr. Brittany Helfer, your internal medicine physician and wealth coach. And today in this video, I'm going to teach you how to create a spending plan that allows you to spend freely with ease, take the vacation on a variable income. And I want you to watch until the end because I'm going to share with you some of the strategies that work specifically for my client who is a traveling nurse and has a variable income for the past 2 years. So if you want to learn some of those practical tips and the best one, make sure you watch until the end. Now, one of the best things about working on your own, either as an entrepreneur, maybe you have a private practice, maybe you are a traveling nurse and you get 1099 income, is that there's some flexibility. There's some freedom that allows you to dictate your schedule. But with that flexibility, sometimes comes unpredictable income. And if you have unpredictable income, it might seem quite challenging to create a budget. Now, the first thing that you need to know is how much do you actually take home? And that take home pay might vary from month to month, but you have to be able to monitor how much you're bringing home in order to create a strategy. Because if some months you're bringing home $10,000 a month and other months you're bringing home $5,000 a month, depending on your expenses, you might have a surplus or you may be negative. And that was exactly what I heard from my client, is that sometimes because of the fluctuations in income, she was relying on credit card debt and the credit card debt accumulated because she wasn't making enough. And if that is you, then I want you to know that there is a way that you can overcome this, and we're gonna teach you right here in this video. Now, after you understand exactly how much money you are bringing home month to month, I want you to take a broader view, zoom out from just a particular month, and try to calculate over a larger span of time. Either that's 3 months, 6 months, or the entire year, but by looking at your tax forms, you can understand how much you are able to generate. Now you have to reflect on how have things changed, because sometimes when you're working as a travel nurse or a 1099, then you may have new contracts or fewer contracts than you did in the past. By reflecting on what the future looks like, whether you have more contracts, fewer contracts, will allow you the opportunity to really understand how you need to adjust that income that you've calculated for your future expenses, and sit down with yourself to understand how much more you may or may not bring in. Are you going to have a surplus or a deficit in the upcoming months? The second thing that I want you to do as a 1099 or entrepreneur, someone with a variable income, is to understand your benefits and what opportunities present themselves for you. I know if you are working as a physician who works at multiple hospitals, you might have W-2 income or 1099 income, and you actually may not or may get some of the benefits. So it's really important that you understand which job and which employer is going to provide you with what benefits and how those benefits might apply. For example, at one employer, you might actually have a match of that income. As another employer, you might have a benefit that allows you to offset some of your expenses for your gym memberships or financial advising. When you work as an entrepreneur or when you work as a 1099, you may not get any of the benefits afforded to you at the hospital. But I know that depending on where you work as a travel nurse or someone who works as maybe a locums doc, that you may have a mix of 1099 income and W-2 income, and based upon the distribution of all of those sources of income and benefits, you might be able to offset some expenses for healthcare or offset other expenses for financial advising, for healthcare costs and things of that nature. And so it's going to be really important that you understand what benefits are included. Now, if no benefits are included, that's important to understand also, because I have had clients who have gone and gotten insurance, independent insurance, and established solo 401ks so that they can still offset some of their tax liability and make sure that they have healthcare insurance just in case chance that they get ill. So understanding your benefit profile will help you not only to protect your assets and to offset costs in the future, but will also allow you to understand what things you actually need to spend on and account for in your spending plan. Now, the third step is to calculate your monthly expenses. I want you to go to your credit card statements, go to your bank statements, download all of the transactions, and do a line-by-line monthly expense assessment. One of the ways that I help my clients do this is by using my program called Joyful Cash Flow. In this program, what I teach you is how to understand your numbers and how to create a strategy that allows you to create predictable cash flow each and every month. And so if you want to know exactly how to do this and have the spreadsheets, the lessons, all of the things, that I want you to click the link below and check out my Joyful Cash Flow course. And because you are watching this video, I'm going to give you a discount code. Yeah, that's right. Because you invested in yourself and you took the time to spend some time with me. I want to reward that and to help you to do this with ease and independence. So click the link below and purchase my course, Joyful Cash Flow, so that you can create the life that you desire and alleviate all financial stress by having a variable income. Now, once you sit down with your monthly expenses, you will know how much you're actually spending. Remember, the money equation is simple. It's your income minus your expenses equal your opportunities. And sometimes that opportunity is not there. It's just negative. And sometimes you have a surplus, especially if you have variable income. That's why it's really important to look at your expenses. And when you're evaluating your expenses, you don't want to just look at 1 month, just as when you were evaluating your income. Because your income is not predictable, I would suspect that your expenses are also going to have variation from month to month, because you probably dial up and dial down some things when you have more money and less money. I'm just saying, that's how we work. When we see more money in the bank, we typically spend it. Yeah, unfortunately, or fortunately, depending on where you land on the spectrum. Nonetheless, you have to really zone into that 1 month, but then pull back. Look at 3-6 months of expenses. And yes, it will take some work, but if you really want to create a strategy that alleviates the financial stress and allows you to predict how much money you're going to have at the end of the day so that you can achieve all of your financial goals, this is something that you have to do. Thankfully, my Joyful Cash Flow course have all the tools built in, so this eases some of the burden of accomplishing this task. Now, after you've evaluated your expenses, you have to categorize your expenses. I want you to categorize your expenses in a couple of ways. The first categorization of your expenses will be fixed versus variable. Say, for example, your fixed expenses might include your rent, it might include your insurance payments, it may include any car loan payments and any student loan payments. But in your variable categories, that might include any credit card payments that you're making, because the minimum payment might change from month to month depending on how much you're utilizing your credit during that month. It could also include groceries and food or electricities. So just because you put something in the variable category does not mean that you don't have to pay it. Variable expenses are expenses that are not the same from month to month, but they still may be necessary for you to live your existence in a healthy way. So you want to understand what are the fixed and what are the variable expenses. Next, after you categorize your expenses in fixed and variable, I want you to give another designation of needs versus wants, because there's not going to be everything that's a fixed expense that you actually need, like your Netflix subscription, for example. It's nice to watch the Bridgertons, don't get me wrong. Like season 3, I'm like, thank you. Why did you break the season up? Now I have to wait for 2 weeks. I finished it, as you probably have as well. But I don't need the Bridgertons. I don't need to consume that content by consuming it on Netflix. And so although Netflix may be a fixed monthly expense, it is a want and not something that I need. So you want to go through all of your expenses and characterize them in needs versus wants. So it is possible that after you've done your categorization, you realize that you may not be able to afford all of your wants. And unfortunately, that is the reality of having a variable income, especially when there are months in which there is a deficit. So creating a hierarchy of those wants allows you to know how much money, if you have extra money in that bank account, you can spend on those wants and what you're actually going to spend them on. For example, in that want category, you might have a trip that you want to take in the future, and that is top tier. So as you have paid all of your fixed expenses, you've paid all of your needed expenses, if you have money left in the bank, then you apply it to that first line item in your hierarchy of wants, which is saving money for a trip. You have a specified amount of how much you need to save, and after you've saved for that thing, maybe you have more money in the bank, and it's like the next line item is purchasing your child a bike. And therefore, you can use that money for that next want. You know, whenever we are making money decisions, we want to make sure that we are choosing things that permit our health, our safety, and our wellness. And by paying for your needs and your fixed living expenses first will ensure that you have the health, the safety, and that you can continue on without having the stress of your finances. And if you want to learn more about how to do this, a step-by-step blueprint of creating your budget with ease and independence, then I invite you to enroll in my course, Joyful Cash Flow. I have the link below, and remember, this link is going to give you a discount, and who doesn't love a discount? I know I do. If you found this video helpful, then please subscribe to my channel where I will give you more wealth tips so that you can have more joy and more wealth in your life. And I will see you all on the next one. Bye-bye.